And this is where, again, most traders take 1, 2, sometimes even 3 losses like that before the move actually happens. If in this path right here, you keep focusing on all of these opportunities, you will fall in massive losing streaks, in massive drawdowns. In other words, you are the liquidity sweeps that I actually focus on, that I actually pay attention to. The things that we want to pay attention to is speed and imbalance. One of the critical factors where I see traders fail time and time again is when price sweeps liquidity, it goes higher, let's say on the lower time frames, as we are here on the 1 hour, let's say on the 50-minute, it gives a shift in delivery. Let's say we are seeing all of this taking place for here, but right after the shift in delivery happens, let's say they take this aggressive entry, aiming for the longs, aiming for long targets right here. Let's see the momentum starts to die down. This is what I avoid 100% of the time. And this is a great example that we have right here as well. Notice that price very aggressively attacked the previous day sell side liquidity here, but right after it started consolidating. So no matter what time frame we are on, no matter if it's a 1 hour time frame, if it's a 5-minute time frame, price is fractal, it's moving the same, and then we are looking at bigger structures, smaller structures, it doesn't matter. We are looking for all the same things. So whenever we are talking about liquidity sweeps, we don't want to see price stall. We don't want to see price start slowing down. It's the opposite. When price sweeps liquidity, we want it to move fast. We want it to move with momentum, with clear direction, with intention. The word intention is really important behind price action. So if we talk again about a specific situation where we have, let's say, a liquidity pool, it doesn't have to be as clear of a liquidity pool. Obviously, it can be just around structure like previous days liquidity, previous weeks liquidity, and so on. But let's say we are talking about a bullish scenario. What we have here is area stacked with bullish P rays. Let's say we have a breaker right here. Let's say we also have a bullish order block sitting right below it as well. And price is moving at this point right here. So obviously what we want to see, let's say for this day, this is a bullish day. We have a clear nightlet area. Let's see right here. We have a draw on liquidity. So now what we want to focus on from this area right here is price sweeping the liquidity, obviously ideally into these P rays and reversing to the upside fast. Now you can enter on this leg right here. And what I'm saying, what I'm trying to say right here is that this first leg is very often the most important part of a reversal. If it moves this fast from specific P rays that you had on your charts, you have a bullish vision for the day. Then price gives a clear close above some specific highs. Obviously, if it's a strong high, let's say that ramps some liquidity, let's say price ramps some buy side liquidity here, drop lower, and then price took out this strong structure right here. That's absolutely perfect. And as you guys know, I will attach right here that sometimes when I trust the formation, when I know what I'm looking for today, when let's say daily time frame is pointing to the upside, and for this day I open expecting for a classic buy day to take place, looking for let's say London chill zone low of the day, pretty often what I will do is enter on this yellow zone. And what I'm talking about, it will highly depend on how fast price moves here and what it's moving away from. So it's not only about the liquidity sweep. So many traders are so focused only on the liquidity pool and on the liquidity sweep that they firstly forget is how that liquidity was swept and where the price swept that liquidity into. If we are open expecting for a classic buy day, so for London kill zone to form a low of the day right here, and we have let's say all the other foundational pieces of the puzzle in place, like a daily bullish stage and opening on this day right here, we want to take along with our magnet area clearly sitting right above, draw on liquidity for the day. This is when I'm often, again, a bit more aggressive when we have everything aligning. Using these words, saying everything aligning, I mean exactly that. Time of the day being in place, momentum of how price sweeps this liquidity being fast and momentum driven, ideally leaving a BPR from some time frame right here. And what I'm saying is that it can be 5-minute time frame, it can be 10-minute time frame, it can be 8-minute time frame, even a 15-minute time frame. If price leaves a BPR or at least a bullish imbalance as it fixes out a specific structure, that's when in some cases I'm okay with not waiting for any pullbacks or anything like that, is literally just is taking my long on the momentum. I'm aiming for my targets. So for target 1, let's say we have target 2 higher and so on. This is when I jump for the ride towards those targets, trading the momentum and what I think that the other pieces of the puzzle already painted for me for that trading day. And when price gives that last piece of information, that's when I like to attack the markets. Again, I will give you a couple of screenshots of trades that we took to the community and our team. Not waiting for those OT deep pullbacks, not waiting for price to stag big conferences of PD race and stuff like that. All that comes in scalp trading conditions, scalp trading environment. When we have everything aligning for a day trade with bullish daily stage, this is the sweep of liquidity that I want to see right here. But now let's talk about this scenario right here. Let's see that even though we have all the other factors, what we get from price action is not what I showed you before, but something like this. Price is crawling lower, stars consolidating a little bit, keeps scrolling lower right here, building liquidity and stuff like that, and then even goes out of the London kill zone environment. So now where traders are confused is thinking that this scenario, that this development that they just saw right here is a sweep of liquidity and a low that you can trust. In most cases, trust me, when price is moving like this during the London kill zone, when price is literally just slowly melting below the liquidity, this is not a sweep. What price is still doing, price is still in liquidity building mode. And what I'm saying is that all this area from the Asia range becomes just one large liquidity that in most cases, if everything else is still aligning for the day, and if let's say you even have some lower PD race sitting below still, and we move into the near kill zone, this is what you very often will see. Right here is price keep building that liquidity, getting some fixed structures during long the lunch that eventually turns into a bull trap, and then near kill zone shakes everything out, gives that sharp sweep and actual momentum driven move right here. And that's when price in most cases actually starts flying towards your magnet areas, towards your targets. All of this right here being just one large liquidity pool, price moving without intention. And this is why so many traders take a lot of losses, because they try to position themselves in those situations when price is moving without intention. And I know that when you don't have enough experience, this can be confusing, but when you actually start seeing those small pieces of the puzzle in price action, this is when you will avoid so many losses, because again, traders take losses in this area, not being able to separate when price is just moving and marking time in a way, and when price is moving with intention towards that magnet area. And this is where again, most traders take 1, 2, sometimes even 3 losses like that before the move actually happens. And the funny part is that when the move actually sets up, because they already took so many losses, they stay out of the position, they stay out of the move that actually takes them to the magnet area for the day. This is the paradox, this is the ironic part of trading. But one bad part is that sometimes traders do see trades like this play out, and they think that it's absolutely okay to start looking for those expansions, trade this sloppy type of delivery, but they are simply not aware of the bigger picture. And I'm talking about the whole path from trade 1 to trade 100. If in this path right here, you keep focusing on all of these opportunities, you will fall in massive losing streaks, in massive drawdowns. In other words, you are the liquidity, because what we are seeing in these type of situations is the liquidity right here, is no intention behind how price is moving. But if, in other words, you stay patient enough, picky with your trades enough, being okay with taking, let's say, less trades, not 3 a week, but 1 trade a week, etc., but actually picking your shots carefully, this is going from trade 1 to trade 100. Your results will absolutely reflect that, giving you a nice and smooth curve to the upside. And that's what you want. Even though I know for some newer, just starting to trade, etc., seeing those trades that are not part of their plan playing out, it hurts. They naturally start thinking that they are doing something wrong. But again, think of this chart right here. Think about the bigger picture, and that will help you to be on the right side of the market, actually taking the trades that move. So let's wrap it right here with this one, or everything I wanted to talk about today, and we will talk very soon. Take care, guys. Have a great day.